Tesla stock at the time of recording this video is down 12.5%. Wow. Here in this video, we will discuss exactly what is going on with Tesla, if this is just a fear, panic move, if it's justifiable, if this is the time to buy Tesla. And ladies and gentlemen, I will tell you it was not on my bingo card personally for Tesla to be down 12.5% today. And markets are doing very bad. S&P is down over 2%, almost 2.5%. The Nas is nasty today, down well over 3%. And I'll get you guys caught up with everything you need to know. So first and foremost, it is UBS that caused some of the pain to start the trading day. Okay, they downgraded Tesla. Okay, they cut their delivery estimates in pre-market. Okay, so that sent the stock down about 4%, and then it's been a snowball all day. So UBS lowered their price target on Tesla to $225 from $259 in a note on Monday, citing weaker than expected deliveries and margin pressure. The firm now sees 30% downside to consensus 2025 earnings per share and believes Tesla stock is trading at an excessive valuation relative to its fundamentals. UBS cut its first quarter 2025 delivery forecast to 367,000 units, down from 437,000 units, reflecting a 5% year-over-year decline and 26% drop sequentially. Now, I agree. Tesla trades at an excessive value relative to its fundamentals. That's clear. We can all agree on that. If you look at today's fundamentals, what you really need to look at is what's next year going to look like? What is robotaxi going to look like in the future? What is Optimus going to look like in the future? When you consider that, Tesla's dirt cheap. If, of course, they are successful in robotaxi and Optimus, which I would say at this point, they're going to be. They've shown enough evidence that they will be successful in these endeavors. And for that reason, I don't agree that it is an excessively valued company based on fundamentals. And really, this is not a huge shocker to any of us investors that have been following the Tesla story. Tesla almost simultaneously flipped over all of their factories from producing the old Model Y to producing the new Model Y. There is a ramp time associated with that. And from what we can tell, demand is really good for the new Model Y. It's just going to take some time to get back up to the same production levels as they had for the older variant now of the Model Y. Well, the firm noted that the current run rate may be lower, again, big shocker, and expects Tesla to rely on more promotional activity to meet targets. There's no evidence of that. They have not done that yet. But if we are slipping into a recession, like is kind of the fear today in markets, that could happen. I'm not going to rule that out. And that would obviously hit margins, but we're not seeing that yet. So they're really going out on a limb with that projection. It says UBS Evidence Labs data indicates, quote, low delivery times for the Model 3 and the Model Y, generally within 2 weeks in key markets, suggesting demand softness. Last we knew, delivery times were 10 weeks in China. We don't really have access to that data on a day-by-day basis. So who knows what it is? But if it was 10 weeks a couple days ago, it probably has not changed very much. Now, in America, you can get a new Model Y in a month and a half, 5 weeks or so, which is, not the, 2-week target. So I don't know what markets they're talking about here. And, let me know if you have some clarity on that down below in the comment section. The firm also revised its full year 2025 delivery forecast to 1.7 million units, representing a 5% decline, which is 14% below consensus expectations of 10% growth. While Tesla's upcoming Model Y refresh, codenamed Juniper, could help demand, UBS believes orders remain muted, citing competition from the old Model Y and a challenging pricing environment in China. Yeah, that to me doesn't make sense. Nobody's competing with the old Model Y. If anyone was given the chance they're going to get the new Model Y versus the old Model Y. So that to me just sounds like a stretch, my opinion. As a result, UBS now expects Tesla's 2025 EPS to be $2.02, down from its prior estimate of $3.16 and about 30% below consensus. So this is a big reduction in their EPS forecast. The firm also cut its 2026 EPS forecast to $2.81 from $3.99. That's a huge reduction as well. And I think they're probably getting panicky over what's happening with Tesla's stock. I don't believe the fundamentals actually line up. Again, nothing has changed with Robotaxi or with Optimus for the worse, right? Tesla just is announcing they're opening a new Megapack factory. That's going to be 3 Megapack factories this year. FSD launched in China, launched in Mexico, going to be launching in Europe. There's so many good things going right now for Tesla. They're really hyper fixating on some of the negatives that they want to see happen, right? I don't think this whole note makes a whole lot of sense to me. They say, while UBS acknowledges Tesla's long-term AI opportunities, including robotaxi and humanoid robots, it believes these are longer-dated prospects already factored into the stock's premium valuation. At its revised target of $225, Tesla would still trade at 111 times 2025 EPS, which UBS considers more than 2 standard deviations above the NTM average since 2022. Again, it's very hard to factor in or price in what exponential growth could look like from Tesla. And there's going to be a lot of variables here. If Robotaxi launches in 5 states this year, and let's say 10 cities, they're going to be way off on their estimates. If Robotaxi doesn't launch this year, if it gets delayed for whatever reason, then it's easier to bake in a valuation of this kind, right? Because Tesla's valuation is really dependent on the scalability of Robotaxi and Optimus. And if Robotaxi scales faster than expected, this whole take from UBS is wrong. At this point, we don't hear much from Tesla. Tesla doesn't come out every day with major headlines. So who's right? Is Tesla right? Or is UBS right? I'm going to take the over and say Tesla is going to be right. They're going to continue to launch Robotaxi as expected and probably, faster than markets expect. If that's the case, UBS is going to be completely wrong on this. But it's just too early to tell because we're not getting constant updates from Tesla. Tesla doesn't have a PR team. And that's where you kind of gotta just stay up to date with the headlines here. And from the headlines that we go over here on this channel every single day, I don't think anyone on Wall Street is more in tune with Tesla than we are. I'm confident to say Robotaxi is coming this year. It's not going to be delayed. Now, how fast does it scale? That's the ultimate question. Now, at the time of recording this video, just in the 20 minutes we've been recording, Tesla is now down 14%. And a lot of this additional sell-off doesn't really have to do with the UBS hit piece today. It has to do with recession concerns. Donald Trump is admitting we're going into a recession. Okay? There's going to be a period of weakness for the economy, but ultimately, we're going to come out in a better position. I agree with that. I think ultimately we will come out in a better position. Reduce government spending, put the fiscal position in a better place, and get back to the private sector growing this economy. That is fantastic for Americans long term. In the short term, it's like taking drugs away from an addict. It's not pretty. And we should not expect it to be. And I think that recession risk is continuing to get priced into Tesla stock. That is what has been happening. Tesla really has not been falling on fundamentals for the most part. I think Tesla's really falling right now on recession risk. You could see this in many other stocks as well. Palantir is down 10% today, right? Another, momentum stock. I haven't even looked, but I can guarantee Carvana's down 8%. I can guarantee AppLovin just to name, some of the biggest high flyers off the top of my head, is down 11% today. You've seen momentum starting to already price in this recession a long time ago. And it's just pricing in more of that recession today. And it really follows Donald Trump comments and a new piece out from BCA Research that we will look at in just a moment. But Donald Trump says he's rejecting pleas from businesses for more clarity on tariffs. He says, quote, "They always say that." This is, again, part of the news that is negatively affecting markets. It actually came out on Sunday. Donald Trump suggested that tariffs could go up as time goes by. And, he said it could be unpredictable, and basically the situation's going to change, day by day, essentially, minute by minute, something could change. And that is a lot of uncertainty. Markets do not like uncertainty. Now, Wall Street has basically said here in recent weeks that they're not as concerned about the inflationary impact of tariffs. They're more concerned about the recession impact of tariffs. And that's why Tesla has been getting hit so hard, right? It's all about that recession that could be coming. Now, another article here says Trump, an agent of chaos and confusion. Economists warn, but a U.S. recession isn't in the cards yet. Holger, chief economist at Berenberg Bank, told CNBC on Monday, "I don't think we will talk about a U.S. recession. The U.S. economy is resilient. I would say largely despite Donald Trump. Nonetheless, U.S. consumers have money to spend, and they probably will. The labor market in the U.S. remains reasonably firm, and with energy prices coming down a bit and probably some tax cuts and deregulation coming, I don't think there's an imminent recession risk." Now, Donald Trump basically confirmed we could be going into a recession. Donald Trump says a transition period for the economy is likely. You can't really watch the stock market. What I have to do is to, quote, "build a strong country." And this is some of the news that came out on Sunday as well. He says, quote, "There's a period of transition because what we're doing is very big." This follows Scott Bessent last week that said the economy is going through a detox period. That's a fancy way of saying a recession. Now, another big headliner for markets today is BCA Research. They downgraded equities to underweight as U.S. is heading towards a recession. BCA Research downgraded equities to underweight in a note on Monday, warning that the U.S. economy is likely to slide into recession due to policy uncertainty and weakening consumer sentiment. It increasingly appears as if the near-term disruptions coupled with tariff uncertainty will help induce a recession. The firm pointed to the Department of Government Efficiency's DOGE recent policies, arguing that while their long-term impact remains uncertain, their immediate effects are disruptive. Renovations are performed with sledgehammers, not scalpels, they added. BCA also highlighted the broader economic fallout behind federal employment. Quote, "It is short-sighted to weigh DOGE impacts simply by looking at the comparatively small number of civilian federal employees at 3 million relative to total non-farm payrolls at 159 million. The knock-on effects are considerably larger," wrote the firm. According to concerns, BCA noted a decline in consumer sentiment and spending. Full-year guidance from large national retailers has been uninformably downbeat. Consumers seem to be tightening their belts in line with their droopy survey responses. The firm has long expected economic momentum to fade as the pandemic-era stimulus effect wears off. Now it believes recent policy uncertainty could accelerate that slowdown. "We think the uncertainty engineered by DOGE and tariffs will provide the nudge to tip the U.S. economy into a recession." They actually suggest that the U.S. economy could be in a recession within 3 months. Evercore is warning today the S&P 500 could drop to 5,200 if stagflation concerns are realized. They say that prolonged tariffs and DOGE uncertainty could raise core PCE by 0.5 percentage points by year end and reduce monthly non-farm payrolls from 30,000 to 70,000, Evercore analysts wrote. Such conditions could paralyze the private sector, all of which could weigh on GDP and fuel concerns of resurging stagflation, said the firm. They continue to favor AI enablers, adopters, and adapters as structural themes for long-term investors. However, if tariffs remain in place and economic growth slows further, the fatter tail outcome of S&P 500 at 5,200 could become reality. And we've talked about this before here on the channel. The fatter tail, the tail risk event. And we are sliding towards the left side of the tail risk event, which is a recession. Now, the tail risk event is defined as something that is unexpected to happen that could have a very large impact, okay? What everyone is expecting, 2% GDP, 10% earnings growth, that's not going to move the markets, right? If expectations are met. It's always what is not expected that moves markets. That's why they say tails move markets, because what's not expected that happens, for better or for worse, is what moves markets. And we're heading towards the left side of the bell curve, which is things are getting worse. The economy is getting worse, heading closer to recession, and that's why markets are moving so big today. Mike Wilson, he was bearish for a long time. He says that, quote, "Our work on the tariff risk to earnings and fiscal headwinds suggests that the low end of the first half range is 5,500. Our year-end 2025 base case price target remains 6,500, though the path is likely to be volatile as the market continues to contemplate these growth risks for the time being." Now, we did not get much for economic data today, but we did get a New York Fed survey, which is interesting. According to the New York Fed survey, the public expects bigger future price increases for gas, rent, and food. Expectations, financial situations will worsen from a year from now, the highest since November of 2023. So people think their financial situations are going to get worse from here. And the expected probability of missing a debt payment is the highest since April of 2020. Why this is important? Well, because if people are concerned that they're going to be in a worse position a year from now, let alone next week or next month, or if they're going to miss a debt payment, they're probably not going to go out and do all of this extra spending. And you're starting to see more and more of this anecdotal evidence that Doge uncertainty around government employees and really anyone that does business with the government is starting to impact broader sentiment around the economy and around job security. See, a recession is a confidence issue. Why? I mean, you might say like, what do you mean it's a confidence issue? Well, think about any recession we've ever had. Okay, it starts with people that are, not confident in their job security, or where their next paycheck might come from in 2 weeks. Okay. They stop spending as much money. So businesses start taking in less money. And then businesses start laying people off. Then those people can't spend. And people start to see more individuals getting laid off, and they get even more concerned. So they stop spending as much money. Businesses stop taking in as much money. They start firing more employees. It is a self-fulfilling loop. When you add other factors like tariffs into this, where business leaders, the last thing they want to do right now is go hire people, right? They don't even know what the tax rate's going to look like. They don't know if the government's going to be open on March 15th. They don't know what the tariff situation is going to look like a year from now. There's no clarity, no certainty whatsoever. And Trump says you're not going to get any certainty. Let alone hiring, you're really not going to do too much investing either. You're going to sit on your hands and wait to see what happens. Okay, that's an issue. And according to the New York Fed, the public is more worried about credit and jobs market. Again, when you're concerned about the jobs market, you don't go out and spend a bunch of money. And New York Fed inflation expectations, the 1 year ahead survey showed 3.13%. The prior month was 3%. So a slight uptick in 1 year inflation expectations, but nothing like you're seeing in the Michigan Consumer Sentiment Survey that shows 1 year inflation expectations that have skyrocketed recently. Elon Musk confirms that there is still a massive cyber attack going on against X. He says we get attacked every day, but this was done with a lot of resources. Either a large coordinated group and or a country is involved that they are trying to trace where the attacks are coming from. And that is why X has been down pretty much all day. You can see down detector that showed the first, spike of reports at about 6 o'clock in the morning today kind of died down. Another attack at 10 a.m. and then another attack going on right now, which has basically rendered X, useless for most of the morning today, which I do think could be another thing that is impacting Tesla because X is wholly owned by Elon Musk and Tesla is associated with Elon. I think some people are concerned that maybe Tesla could be a target of one of these larger attacks soon, which would obviously, potentially shut down factories or create a lot of issues with delivering vehicles. And well, there could be a lot of other implications as well. And I think that is some of the concern today that is also affecting Tesla. Here on the day today, the Dow is down 700 points, down about 1.62%. S&P is down 2.5%. The NAS is nasty today, down about 4%, and the Russell 2000 is down 2%. But what's really alarming to me at this point is the VIX is only up 15%. Okay, the VIX opened the day today at 2470. It's currently at 27. Like, you have not seen the capitulation event yet. Okay, normally to get a bottom, you need to see people really panicking. I don't know what the catalyst is for true panic, but this is, a methodical or logical unwind here, right? This is not orderly is probably the way to put it. This is an orderly unwind of positions. It's not panic yet. Even though the VIX is up 15% today, you may think it feels panicky, but it's not. Until we get the VIX that really spikes like 50%, 100% in a day, I don't know if the sell-off is going to be over. So we continue to fall further. At the time of this recording, you are now down on the SPY about 8.5% from all-time highs, but you have not gotten the panic yet. Which by this point, we've seen the panic in every other correction going back years, right? You're not getting the panic yet. Could the panic, come soon? It's feeling like it. And then that's where I think you get a more lasting bottom, but it's just not here yet. Now, what's also fascinating is from a technical perspective, you're below your 200-day moving average. The next level of technical support is likely around 555, where Mike Wilson says we should find a more lasting bounce. I can probably agree with that from a technical perspective, but that's still getting you back to just where you were in July of 2024, right? Before the August flash crash. If you were to go back to the August flash crash lows, would be, another almost 10% decline from here. That's a crazy thought because it really wasn't that long ago. Now, your 300-day moving average is sitting here at about 545. Now, if recession fears start to build, you could find your way to this 500-day moving average down here at about 497, which from here would be another 11.5% downside move. And from peak to high to get to your 500-day moving average would be a decline of about 18.82%. That would be almost a technical bear market. And unfortunately, I don't know, if these recession fears are going to go away overnight. It's getting priced into markets, much the same way as momentum stocks sold off, from July through November of 2022 or 2021. That's when momentum started to sell off first and got destroyed. By the time the S&P hit a new all-time high in the first week of 2022, momentum was already down huge. It was a leading indicator to a broader market sell-off. And that's what I see right now with Tesla, AppLovin, Carvana, Palantir, Nebius, all of your higher growth, higher speculative momentum names. they've all gotten destroyed so far. That seems to be a leading indicator to more downside in the broader markets. You can also see the SMH. This is the semiconductor ETF. This thing has gotten utterly obliterated, well below its 200-day moving average now. The last time it was below its 200-day moving average like it is today was in 2022. I mean, it first fell below this back in February of 2022, and for the most part was a leading indicator to more pain in the broader markets. And that is the same thing that is happening right now. Now, tomorrow morning, we are going to get the NFIB Business Optimism Index. I think this will be important because it'll tell us more about investment plans from businesses, right? After the election, this thing soared, absolutely went crazy. With the tariff concerns, you could see this thing plummet, and that's going to bring up more recession concerns, and that comes out tomorrow morning at about 5 o'clock in the morning. But tomorrow at 10 o'clock in the morning, we will get the JOLTS job openings. Now, it's pretty straightforward here. If job openings plummet, labor market is weakening dramatically. If job openings are stable, then labor market could be doing okay. If job openings go up, then that's a good sign for the labor market. So it's kind of like CPI. Like the opposite of CPI. You know, a lower number in this case is bad. A number that comes in line with expectations is okay, and a number that goes up is really good, right? Because if you're a business and you're looking to hire 5 employees a month ago, and now you're only looking to hire 2 and you haven't hired anyone, well, that's probably a sign that business is slowing down or you're less confident about the future trajectory of your business. And JOLTS job openings will be a massive catalyst coming tomorrow. We do get CPI data that comes out Wednesday. That's the big catalyst of this week. On Thursday, you have PPI, and on Friday, you have that Michigan Consumer Sentiment Survey. Now, here on the day today, CNN's Fear and Greed Index is sitting at 16. Yesterday, it was at 20, or Friday, it was at 20. Market momentum, extreme fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear, market volatility, extreme fear, safe haven demand, and extreme fear, and junk bond demand is now in greed. But again, unfortunately, you're really not seeing this mass panic yet. It's more of an orderly unwind, which, you know, until we get that panic, it's hard to say that we have an intermediate bottom for markets, which does intuitively suggest we could get more downside from here. Now, the percent of stocks trading above their 50-day moving average sitting at about 28% today, down about 3.5%, which, you know, you're just in a bad place, but certainly could get worse. And the AI investor sentiment survey that came out on Thursday does show that people are very bearish out there. I mean, there's not that many bulls. Less than 20% of investors right now responding to the survey are bullish. That's the lowest numbers you've seen since the bottom of the bear market in 2022. In the news today that could be affecting Tesla, Ford will inject up to 4.4 billion euros, about $4.8 billion, into its struggling German operations as it tries to revive its European business, the company said today. Kia's official Norway account posted this Kia vehicle, the EV3, with a sticker on the back that says, "I bought this after Elon went crazy." Sawyer Merritt calls out that this is a bad look for Kia, and Kia, well, deleted their post shortly after. Elon Musk says they really did that, and Sawyer Merritt here provides the proof that shows they did. This was on Instagram. There are growing calls that Elon and Tesla should take legal action against Kia. And Tesla Thailand is teasing a new launch of the Model Y in the country in late March 2025. And it does look like the Cybertruck could launch in Australia soon, according to Pham Drew, Tesla's country director for Australia and New Zealand. Option activity in Tesla stock today from hedge funds and institutions is actually quite positive. You have 261 different trades totaling $177.35 million with a positive order value of 57%. The fact that this is more positive than negative on a day like today when Tesla's down 13% is actually wild. Now, you could see 464,000 shares today on net that are being sold short. Not a huge surprise considering Tesla's down so much today. Google Trends data continues to inflect upwards for Tesla products, specifically the Model Y going from 13 to 15, Model 3 going from 10 to 11, S and X are stable at 5 and 4 respectively, Cybertruck's even moving up from 15 now to 16. So all things look good as far as Tesla's search trend activities. So again, Tesla's decline today, I really just think can be boiled down to the cyber attack on X, the analyst downgrade of UBS, and the overall unwind of momentum stocks out there. Because of the recession fears that are starting to get priced into markets, momentum is always the first thing that goes. And well, it looks like that is happening right now. Unfortunately, I don't know where the bottom is for Tesla in this scenario. You've basically broken through today all of your support levels, one of which was going to be around the 240 level. You had a gap, a big gap up on October 24th at this level where Tesla went up 22% in a single day. You've flushed through that. The prior gap level at 232, you're now below that. Tesla stock's at $227. You're below your 230 level, which psychologically should have been a big level of support. The next level of support doesn't look like it could be around 210. That could be a level of support. I do have this trend line here, which would find support at about 190, which if recession fears continue to grow, could be in the cards. Now, Tesla's RSI is at 21. Like, the stock has sold off a crazy amount. If you've ever been bullish on Tesla in the past, I think now is a great opportunity to buy Tesla. The stock's down 54% from all-time highs. I think longer term, if you have a long-term perspective, you'll do just fine. And I think, again, Tesla's pricing in a lot of that recession risk up front. So if we did get a recession, Tesla's already kind of priced for that. Could the stock fall more in the short term? Sure. But I think, again, my strategy is the best right now, just buying a couple shares every time the stock is, moving lower. Just seems to be the best approach right now instead of going all in at a certain price. But definitely going heavier today makes sense in my opinion. So let me know what you guys think about this down below in the comment section. I mean, you're due for a bounce anytime now, but there are some powerful forces at play in markets. And until we get capitulation in markets, until we get a mass fear and just totality of the sell-off hits capitulation, I'm not confident in saying, any specific day is the bottom. Although, after you're down 13+% in a single day, you could start to make an argument that the bottom is getting closer and closer. But it's not just Tesla. It's momentum stocks at large that are selling off today. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.